Well, and a very good evening. It's time now to take a look at some of the top stories making headlines in the business world. My name is Abi Agina. Co-operative Bank of Kenya's first half net profit has increased 32% to 6.24 billion shillings, keeping pace with its local rivals. The lender's operating income for the period grew 10% to 17.7 billion shillings, while net interest income from its loan book went up by 19% to 11.8 billion shillings, significantly boosting its earnings. Here's more on that results story, as well as future plans into the three other East African countries the bank plans to venture into.
The Co-operative Bank of Kenya appears to be getting it right as far as its turnaround strategy is concerned.
With the sales force effectiveness and the branch transformation, and us having been able to push more of our transactions to alternative channels, the staff in the branches are able now to do more in terms of frontline productivity, in terms of selling more business to the customers. And that's why I said we have actually seen the staff increase the frontline productivity by 40%.
During the half-year results, net profit grew 32% to 6.4 billion shillings on the back of increased efficiency. Total assets grew by 22% to over 320 billion shillings, a strong indication of the bank's fast-growing asset size.
We've trained our people more, we've invested in terms of better efficiencies, we've reduced our cost structure. Our cost-income ratio was 51% from 62% last year, end of last year.
The bank further saw a surge in its loan book, which translates to a net interest income growth of 19% to close at 11.77 billion shillings compared to 9.93 billion shillings reported in 2014.
We're borrowing $120 million from the IFC. We're almost concluding that line, again to go to SMEs and to the export sector.
The bank attributes the performance to improved efficiency as well as the growth of alternative banking channels. Co-op Bank has been struggling to modernize its operations to be as competitive as its peers in the sector. The bank is looking to double its customer numbers as well as capitalize on emerging markets in the region. With 5.4 million customers and 143 branches, the bank is optimistic of growing the numbers despite a dip in the uptake of loans, mainly fueled by high interest rates.
There has been marginal increase in interest rates. Central Bank of Kenya did not change the CBR rate last time, so we expect interest rates to more or less stay where they are at the moment.
The bank is positioning itself to tap into the nascent banking sectors in Uganda, Tanzania and Ethiopia, with its subsidiary in South Sudan making a comeback despite growing fears of a slowdown in the South Sudan economy owing to heightened political upheavals. Abi Agina, KTN Business.